Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Thursday, October the 5th, 2023. As you can see, I switched over to the S&P, and that's where I'm going to begin today. I'm going to keep it on the hourly chart. The focus really is just this corrective pattern that we got going on. And so far, I have now shown two different variations of what actually could be going on and where the resolution would come in. And still, with each one, looking for an additional leg down to complete the minor third wave. So under all of what I presented thus far, we basically are still within that fourth wave, except what I'm going to present today. It's a little bit different, and it just shows that the minute wave 4 is complete at that level that I had shown. And again, this is in the S&P now. So showing that the same, that at last Friday's early high, completed that minute wave 4. Then we started to move lower and put in what I'm labeling, again, this is alternate number 3, we'll call it. So it all fits. So the alternate number 3 yesterday was alternate number 2, which kind of showed that we had an irregular B wave here and that we were going to get a C wave, and we had that potential to push back up above these levels to, I think it was 43.88 was the 1.618 retracement back up for a C wave. That also remains valid. But you'll see under that, we got seriously stuck. And in fact, instead of continuing higher, we took a nosedive first, and then they bought it all back. So again, is this, in terms of that particular count, looking for a C wave? Well, what was all this? Is it A, B, and now we're doing a C wave? Very possible. Now, going into what we're looking at here, could this be the minuet wave 1 of minute wave 5? Yes. That's an alternative, an alternate view, an alternate count. And then, so what could this be? All of 2? Possible. Or is it just A of 2, B of 2? And now we're going to do a C wave up. And we already know that in a wave 2 position, the most common fibs are 50 to 62% retracement. Well, we bumped our noses up against this 50% retracement several times. And then again, now we got what we got going on the hourly chart is that we have the 100-day simple moving average coming still declining. And now the rally hit into it and then backed off. So this is a possibility. Now, what's also a possibility is 1-2-1-2, which would suggest we fall off the cliff again, as this third wave, under this view, as the third wave would then kick in. Now, on the continuing fourth wave, which also makes a lot of sense, because again, what we saw today was a lot of activity in tech stocks. Nothing really has changed in terms of what is really driving the market lower, and why positions are changing, why things are happening the way they are. But what we're seeing in between, again, first week of October, so it's adjustment time, first week of the fourth quarter, etc., is still a lot of adjusting going on, where they're moving into NVIDIA, they're moving into Apple, then suddenly, and now add on to that tomorrow's expiration is now going to start to come into play. And in Apple, what we saw today, they wanted that close above 175. Now, I think today they actually, a lot of the bigger players, they got the stock up at 175, and they monetized those calls. So maybe they already got out. So whether it sits and stays at 175 is going to be a moot point, so to speak. Don't know. But when I see this happening, that's one of the things that goes through my mind as an options trader. Now, so tomorrow is a Friday expiration. Tomorrow, let me just double check. What, if anything, we're going to have in terms of, we have the U.S. employment. We get that big report, and that comes out tomorrow. And the employment rate, the hourly wages, blah blah blah, and then we have a whole host of Fed presidents and governors stepping out to the plate. And it all seems that they're still all talking about these payment symposiums. So maybe that's where they're all speaking, and that might be a 2-day type of a deal. And yeah, whatever. But it is listed that they're going to be out there speaking. More importantly, we have the U.S. employment. Now, here's the gig. We got at I think whatever Monday was Monday. When did we get that ADP? We got the ADP on the JOLTS. Excuse me, it was the JOLTS on Tuesday. So now tomorrow we have the actual unemployment report, or the employment situation, whatever you guys want to call it. And basically it's the non-farm payrolls that's the most interesting one, or interesting part of that report, coming out tomorrow. So we've kind of got a couple of hints. They kind of seem to like the initial jobless claims report today, but maybe they didn't because we sank like a stone. Took a little while for it to kick in. So I don't know which part of anything it was that would have driven it. So when I'm looking at this one, and it's 1, 2, 1, 2, we fall off that cliff. What could do it? Tomorrow's non-farm payrolls, unemployment situation report. If that data comes in and shows anything like what JOLTS was telling us on Tuesday, we likely will start with another one of these. And that's pretty much right in line with a minute fifth wave, dropping us down, getting us down into here or even lower to finish minute 5, to finish minor 3. Nothing. But it's always now dependent on what that catalyst, what's going to force the hand, what's going to tip it, so that if they're coming in and they're buying for whatever reason, okay, they did it today, and tomorrow they get to see how well it will work. And again, what we do see a lot about, and when it comes to asset managers, they're shifting money, because if they're trying to prepare themselves and their portfolios, their customers' portfolios, then and if they're heavy in tech, which is very favored, artificial intelligence, how do you want to survive all of that? Because when the whole market goes down, guess what? It'll go with it. So the premise is that it won't go as hard, it won't go as fast, it won't go as deep. So if the total market is going to drop another 15-20%, then the thought process is that stocks such as NVIDIA, Apple, any of the artificial intelligence, the big tech stocks, won't drop as much. So their portfolio will be balanced out, and they will have, quote unquote, beaten the market. So that's all still at play. But we have enough that could tip the scale. So this particular alternative view fits. Now, again, so that would be one. And I've already presented the other where that wave 4 isn't over yet. And so we still have, that's the A. Here's the B. 1, 2, we need to get that third wave going. So maybe they're going to love this non-farm payrolls report, the unemployment situation report for September. Maybe they're going to love it. We don't know. We will find out tomorrow morning, 8:30 a.m. Eastern. So again, all remains in play. Now, this is set up. I need to just straighten that out. I'm leaving it here, but I don't like that 786. So I want to just drop that, or 7.5. Yeah, 786. I want to get rid of that one. 618. 236 is not valid anymore. 382. So we're going to leave it like this. This would be for the balance if there was still a little bit of additional upside to go. But we would be looking for it to come down. Now, again, I can, if indeed we're looking at a little bit different. I'm going to remove the retracements. Yep. And now this is to say that the 4 is not done yet. Okay. So I would have to take this up, but I'm just going to leave it because what I want to show you is, again, those fibs for that. And I'm sorry if this is going to appear confusing, but I just want to include them because all of this remains valid. So it's 43.85 is the exact level. And that's if I've got all my numbers right. Okay, so that's where, because this, A, a 4, B, a 4, and it was an irregular. And so part of that would be that the 1.618 for the C wave would be the most common, and that's at 43.85. So again, I was thinking we might have started heading for that today, but boy, we stall out. We barely get up very far, and they nailed this thing this morning. And so still finishing down on the day. So it would have to pick up that speed and just get it up there and go there. But it still remains an alternate. So then I'm going to take that one off. And so those are the ones that we're, if the fourth wave is still got left to do. And here in the S&P, I actually can probably just narrow it down to the 2. That the 4 is incomplete and it's got to jump and go. Or the 4 is complete and it's 1 and the 2 still has a little bit of room left to go. And if that's the case, then we're into that other right there. And let me go one more time. And this is the one I'm actually going to leave up. Let's edit that. Let's get rid of that and just put in the fibs that make sense. So right now it's above 42.87, which is 0.382. It's touched 50%. And if it's still got a little bit more to go, then it probably might get up to 43.19, 43.20. What it can't do is it cannot go above 43.69, which is that high. Okay. So I tend to kind of favor this one a little bit versus it getting up to 43.88, even though the difference is not all that great. But unless they really love that number tomorrow morning, I think that this is likely going to be the case. But keep both in mind. Like we all say, I hate surprises. Now, again, let's just take a quick look. I want to update the daily in terms of where our fibs are. You can see on the daily, on the S&P, we're still below the 200s. We're kind of coming up. We keep touching now 2 days in a row. We've come up, touched, and closed or touched the daily 4. This is the daily 8. And then and the daily 8's come down and is basically kissing the 200 SMA. So once again, we're going to see. We're going to see how this all pans out. And we will go from whatever it wants to tell us. All right, I'm going to go over to the NASDAQ now. I've basically put in the same thing. In NASDAQ, I showed you yesterday where this would be ABC-A, ABC-B, and we're in a C wave. And it, still, it's possible. But boy, does this thing need to catch fire. And it did sort of, and they nosedived it. And then they just stood there and bought it all back. And basically, I got to be honest with you, it is not broad. It is not really broadly based here. It is just really, Tesla was down more, but Tesla came back up. It's NVIDIA, Microsoft a little bit, and Apple. I mean, there was more involved when it was really going to do a hard swing. They had a lot more things up, but Google was up sufficiently, Amazon, but they all turn around. They give it up. But NVIDIA keeps hanging on. Apple kept hanging on for 175. So again, tomorrow's expiration, got no clues as to what and where they're going to decide that they want to pin it, but it will have a play in what takes place. So in any case, here we have it. If the 4 is complete, 1, 2, 3, 4, 5, and that's wave 1. It's not the prettiest, but it works, and it will fit in there. Now, a lot of people, I do have one extra one here for the NASDAQ, by the way. So we'll go through this one first. So that's a 1, 2, 1, 2. Now here, this fits really well in terms of that employment report comes out before the opening. But what could crush it is that overnight they decide they're going to push the NASDAQ higher and they bring it up to closer to here. Then we're going to be looking at one of the alternate views, right? This is one of the alternates. The other would be the 4 is still in progress. And the next two that I'm going to present are both that the 4 is still in progress. So the first being that the 4, and this is the A of 4, the B of 4, and we're in C of 4. And on that one, it would suggest that and these are pretty flat, right? So it suggests that the C wave, excuse me on the voice, that the C wave is going to get back up towards 15,060, 61. And actually, I think it comes a little bit below actually a little bit above, because we didn't break that low. So we got down. So if we add maybe 15,062 or something in that nature in there, we get that completion in the C wave. So, but it's an ABC flat. So we're looking for it to basically get itself back up into here. And then tip over. Could do that overnight. And then we're ready. So again, we need to be prepared. We don't know what those numbers are going to show us tomorrow. But I don't really see anything other than algorithms overreacting, any reason to go start jumping for joy because of these employment numbers. And so I think that what algorithms take their cues off of are, again, that the data itself and the click words that they pull out of it, but also the bond market. So when they're looking at the bond market and they see what the reaction there is, because of course that's interest rates. Okay, so one other one that I want to present here that could very possibly be the trick is that wave 4 is still in progress. Now, let me start taking off these. So just leave these, but let's not pay attention to that. Let's move that and put this over here somewhere. And what we got is ABCA, ABCB, ABCC, ABCD, ABCE. A triangle. Now, one thing that we're looking for is not so much that the triangle is going to be flat. We need it to actually form the triangle. But I'm going to leave it there. I'm going to leave it there because of this, if I can get it up and angling that way, and I get this down angling this way, right? So what could also help, I just take these extremes out. Then if this is A and this is B, and this is C, and this is maybe D-ish, and we can put lines here to here. So in other words, you always want to see where this is all going to come in. And if we go this way, we got that one. And if I come this way, we got that one. So you can see how it starts to wedge. And that's what we want to see, wedge. So there's the triangle. And triangle patterns in a 4th wave position, beautiful. And it helps to to give a little bit of insight. This thing's been in a box, so to speak. If we keep looking at it, and I'll show you the box. This is the box. There's the low, there's the high, there's the low, same levels. And it got back up. Where's the high? Didn't get quite there, but close enough. And then suddenly we start to wedge. Now, could be a D, and then we do that, and then still get an E wave, but we'd be looking at that upper channel. So it is, in a way, kind of coming across. Or I'm going to remove that one, and I can put it in, but we're just going to flat bottom. So with a little bit of a decline here, I just take this out and stick it from there. Right? Still wedging, flat bottom, wedging down. So again, we're going to keep that alive as well. And I'm going to remove both of these. And I'm going to leave it in the one where the 4 is complete, and it's a 1, 2, and then likely 1, 2. And we'll see how that all comes out. And again, for the other, which is more of a flat, 4 still in progress, and this would expect to come out and basically come in 15,060-ish, and to complete the C wave. The A wave, the B wave, we get the C wave, and it should be an ABC flat. So a little bit above, but not that much more. So those are the scenarios that I'm going to leave with us. So we're not going to get a surprise. And all of them are to fulfill a 4th wave. So all of them still point to a minor 5th wave down. We're not into something new here. We're not into something where this market's just going to explode. I don't see the catalyst. There has to be a catalyst that's going to really flip the thought process of, oh, the Fed's not going to do their additional rate hike. The bond market is not going to continue to go down. Now, so everything's falling into place. So all the different talk, oh, it's just talk, whatever. So again, there's too many things sitting out there that are dictating that a resumption of a stronger up move, not yet. Not yet. I do think we got one coming, but I need to finish this minor third first. And that minor third is for both markets. Right? There's the minor 2, so we're in a minor third. And where's our downside targets? We got some serious downside targets here. If I come back here and I just put this in, oops, I'm going to redo this, go here. And if we're saying that wave 4 is done, and I'm going to come back over here, then what are we looking at? 14,283. Okay, that kind of fits. We get below that 100%. I'm going to be happy. But but anything underneath there is just gravy, additional. But then if we're falling in a minuet 3 and then a 4 and a 5, well, that works. And then we'd be able to add additional once we got the 3 and then a 4, and then I add another between 1 and 5. And then we'll hone in on where it's going to end up. But these are just the basic framework for a minute 5th wave. There to there, in between. On the minor third, for sure below here. Anything below here, that's that extra that I've been looking for, and I've talked enough about that. So I am going to kind of wrap it up right in here for right now. Again, tomorrow morning, 8:30 a.m. Eastern, we have U.S. employment report and the unemployment rate, which will be important. And then we also have a bunch of Fed governors talking. Much later in the afternoon at 3 p.m. Eastern, consumer credit, but that's never had. And it's going to show a pretty big increase. But markets don't seem to care that retail is going to go bankrupt. All right, that's it. That's it for today. Have a great evening. Have a great trading day tomorrow. There were some very solid opportunities today. Just depends on how aggressive you wanted to be and how hard you needed to trade. Tomorrow, I'm sure, is going to present also some solid opportunities in both directions. I am no doubt that this is going to go in both directions and will be fast, furious, volatile. The next update will be if I do it over the weekend and I do a Eye of the Storm podcast giving the big picture, it may cover everything. But I always include the comment that should Normally, I would wait, and then on Sunday, once Globex opens on Sunday, I do an Elliott wave update. And if I'm doing a big picture update, it basically would include right down to what's going on right now. And unless we get something more severe on Sunday in terms of the opening, I would present that podcast as the weekend update, which would carry us into Monday. So next update, definitely if we get one on Saturday, it's going to be the podcast. If not, then there's going to be one on Sunday, October the 8th.